23rd February 2023, Thursday, MAO with Cal. Now, in my opinion, the Fed fund rate will see 6% by August 2023. All right, I'm not kidding you. And by the time that happens, most likely we'll see a US recession. Really, this is my own opinion. But based on the Fed fund, based on FOMC meeting minutes, it's pretty clear that we will get to see the 6%. And of course, the next thing that's going to be very, very dangerous right now is the property prices in US coming down, right? And one company, Blackrock, to me, is going to face some problem. And thing is, these funds are moving away, and when that keep on happening, this will spread. Okay, it's a very, very same thing we saw back in Lehman Brothers. Let me share it more with you now. Now, once again, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, before we go into that, now basically remember, guys, I'm coming back with this spin the wheel lunch with Cal thingy, and I'm inviting 5 lucky ones, all right, to join me next week for a very nice, sumptuous lunch, okay, at this particular place at Tan Kui Lan. It's called Hager, all right. Very nice. The food is fantastic. So I've been there for like a few times, and I tell you this, the chef is really top notch in my opinion. And of course, I think you guys have saw it, and you guys have already had to put comment there. Great job done. So remember this, I will collect all the names, and then this coming Saturday, I will do the spin the wheel. So 5 lucky winners will join me for this very nice lunch again next week. Yeah, I'll tell you more in details during on Saturday. All right, so quickly leave a comment right now for yesterday's video. Today's video is fine also, and I will just accept you, no problem. All right, just come in, okay? All right. Okay, moving on. Okay, let's recap what happened last night. Well, the Dow Jones came off 84 points, managed to turn green towards the end, and of course S&P 500 down by 6 points. Now, across the board, Google, Microsoft, Apple really was not moving much. Amazon was up a bit, 1.28%, but it's still below the $98 mark, because that means that the market cap is still below $1 trillion. Tesla is up a little bit, a bit of recovery, but that's all. So what happened? Okay, S&P notches the 4th day of losses after Federal minutes reaffirmed tough stance on inflation. Okay, so basically it's right. The Wall Street traders thinks that the recent Federal Reserve meeting minutes most likely will be showcasing that the officials are looking to hike rates further. Now, so what happened is that the meeting minutes shows that inflation remains well above the central bank 2%, so they still get 2%, and the labor market is still very tight, meaning it's still pretty good, right? So it's going to be very difficult to see inflation coming down when the labor market is strong. So if let's say whatever interest rate they have been hiking is still not good enough, then it means that there's a lot of room more to go to hike interest rates. And the thing is this, although some reduction in inflation is welcome, but it's still not fast enough. So apparently now more and more people are getting very concerned right now, and you can see the equity market actually recovers to, initially it was down first, then after it recovered, all right, and then when the minutes meeting came out, right, the selling was quite strong indeed. Okay, so I'll tell you more in details when I go to that segment here as well. But let's watch Steve Lippman, what he has to say when he announced the Fed meeting minutes. Yeah, let's bring it in. Okay, let's go.
Of the participants in the Federal Market Committee. 25 basis point hikes were seen as allowing the Fed to assess the economy and the impact of rate hikes as they went along. However, a few wanted to raise by 50 basis points. In common Fed speak, a few is more than 2, so there may be another person, or appears to be another person out there other than the 2 whom we know, Bullard and Mester, who wanted to go 50. They wanted to go 50 because they wanted to bring the Federal Reserve more closer, more quickly to the target where they were trying to get to. Several saw risk to the outlook as becoming more balanced. Participants supported maintaining a restrictive policy stance until inflation was clearly on a path towards their 2% target. Inflation was seen as unacceptably high. There was substantially more evidence was needed for confidence that inflation was on a downward path. It was important for financial.
All right. So simply put itself, right? The Fed officials, all right, some of them, all right, a few of them, not sure it's 2 or 3, all right, are looking at 50 basis point, and that is the main concern right now. So because the thing is this, the Fed fund rate right now, right, is at 4.25, and they're still going to be looking at a high number. So a few members says that they wanted half a point basis, half a point rate hike, okay? But of course, majority prefer the 25 basis point. But the thing is this, when they are favoring that, it's because they feel that by quickly bringing up the interest rate higher, it will really cause the inflation to come down. Because now whatever has been having done the last 10 months, 11 months, nothing seems to be holding back or pulling down inflation, even though there is some welcoming sign, but it's not good enough. So the things that other than Mazda and Polar, we all know that maybe one or two, we don't know, all right? So still, most of them are looking at this 25 basis point and they feel that this is going to be good enough. But of course, some members see the risk of recession as elevated. And because of that, this should be really, really done fast and swift, all right? So right now, what is happening right now, people are worried. And of course, the current situation now in Ukraine, this would actually create a little bit more problem, because if there'll be a war right now, then of course prices will just shoot up again. And when that all happens itself, then the chance of, you have to do a more rate hike to really bring down inflation. So based on what I'm seeing right now, right, in my opinion, very high chance, in my opinion, we will see a 50 basis point in March. Really, I'm not kidding you. And that's why I believe right now, Michael Hanna and friends, okay, they are looking at the 8th of March as one of the key deciders because of the ADP. And if the ADP figures are actually good, then that is a very high chance that means they got lots of room to do, and 50 basis point is not going to be too far away. Now, 1 week ago, you can see this is 1 week ago, the consensus was at 84.9% were looking at the 25 basis point, and only like less than 15%, about 15% were looking at the 50 basis point. All right, that was what 1 week ago. But crazy enough, within 1 week, right, the thing has shifted from 84 to 73, and now from 15 has jumped to almost 30, now at 27%. And my opinion is this number will keep on moving to this side once we have more and more data coming up, especially this coming ADP figures next month. So, but again, analysts are very positive. Okay, they say apparently 42 analysts was interviewed, and they are pretty bullish. In fact, they says that the stock market S&P 500 will rally by 9% this year. Wow. Okay, so they're looking at 4,200. Now these guys, I don't have the name. But interestingly, they are all very positive. In fact, they are so bullish on the Dow Jones. They're looking at the Dow to hit 36,200. Wow. So when we have people like these people calling for buy, and with the optimism right now, you can see the Fear and Greed Index at now 63. All these tells you that maybe the economy got a lot of room to go. In fact, it's right. If you actually study the Fed meeting minutes, right, I realized that it actually also got mentioned about the concern of the current equity market is kind of overbought or overvalued, all right? But this little part was not mentioned in any of the media. So I believe that, right, this is the thing here itself. So all I can say is this, guys, be very careful. Things may not be going fine. And of course, central bank around the whole world, like Bank of Canada, just need to raise rate if companies keep raising prices, apparently, right? And of course, very critical, Japan government bonds breaches the yield cap, all right? BOJ has stepped in with the buying, all right? So this is, again, all these signs are telling you that things are not going well. And in fact, right, for this BOJ ceiling of 0.5%, a second time in the second consecutive day, this actually tells you that there's something going to break in this Japan. And if this is going to continue, I'm pretty sure Japan will hike their interest rate for the first time in many years, all right? And if that happens, I tell you, it will send a real wave of selling across the board. It will really, whack the market down. So Jim Canos, he actually is still pretty bearish on this Coinbase. Now, we all know that he's been calling for sell, and even though this year the market rallied 70%, yeah, indeed, from the low from $30 over back to about $70, that's quite a big jump here. But he believed that this is a narrative stock. It's not a fundamental stock. He believed that, right, all these things itself would not survive. Now, we all know that the Coinbase came out with their earnings and it was short of analyst estimate. And this is obvious, right? And of course, share price of it actually came down from all the way from 300 back in last year, October, and now it's worth only $61. Now, at one time, the low was at $31 to $33. So imagine it's like down by 90% at one stage itself. So the thing is this, the founder of Canos, right, he believed that this Coinbase make money in two areas: increased commission rate for retail and omission of interest on customer deposit. But the thing is this, if you actually increase all these things itself, right, it will cause investors not to continue, and then when that happens itself, right, it will not be able to sustain the business, and of course with the interest rate environment going up, right, this can be worse. So that's why Kenos believe that there will be more selling, and if you ask me based on the chart I'm having right now, well, I also stand by what he say. I believe that once the share price goes below $61, there's a good chance again it will come back down to $40, okay? And the volume itself shows that they are actually selling activity, not buying. We have seen it before when the volume came in and the price goes up, it didn't sustain for too long, and the selling bring it down all the way to new low level. So to me, that will be the target for at least the next few months. Yep. Alright, so the thing is, let's hope that Caddywood is not buying. Okay, Caddywood have been buying this counter Coinbase for lots of time. In fact, she bought more on 14th of February. So I wish her well. I really hope that she knows what she's doing. But of course, we all know that she's dumping a lot of money. Since last year, January, February, she's been buying and buying non-stop. So of course, if one counter to watch out for is, to me, is up. If anything happened to the entire crypto space, I'm pretty sure up will get hit very, very badly. Alright. Now, moving along itself, this is something that I want to share with you. These are property prices are starting to fall in America, and this is S&P Case-Shiller U.S. National Home Price Index. Now, every time when this index has to come off, right, you can see that recession is almost instant, okay? So this is something that to take note of, and now we are almost facing the same thing again. And of course, with the interest rate environment continue to go up, that will add more pressure for the property market. As you can see over here right now, you can see that this is the year-on-year change in existing home sales and S&P 500 trailing 12-month operating earnings per share. This is from Game of Trades, one of the YouTubers that I follow. They are pretty good. And you can see very, very clear that the falling home sales fall once the earnings, alright, is pretty bad. And the last time we saw something like this, it was back in 08. So again and again, guys, this is all the clear signal that the property market is going to come off. And of course, if that happens, it will bring the stock market down together. This is definitely for sure. And the big thing is this now. We all know that Blackrock has a lot of properties under the hand. And apparently now, right, there's a lot of people now betting on it, against it in fact. This is going to be crazy. Let me show to you why. Now this is apparently Florida has pulled out $2 billion out from Blackrock ESG fund. And this is not a good sign because I mean, the thing is this, if you are happy with it, why would you pull out funds, right? So that means that something is actually very, very wrong right now. Now, let me bring you the video about what happened. Let's go.
Jonas is here. I want to thank you for joining us on the set, no less.
Thanks
nice
for
to see
having
you.
me.
So tell us what you think the problem is here. From your perspective?
You look, at the end of the day, I care about the bottom line of the citizens of the state of Florida. I was in the restaurant business for 30 years, and I know this. In the restaurant business, if people are ordering fish, my restaurant's a fish house, if they're ordering fish and I serve them salads, they're going to take their money and go somewhere else. And that's what Dad always says. If you want to get somebody's attention, you get into their pocket. So it's exactly what I feel. At the end of the day, I get my arms around the job that I've got, and I care about the bottom line.
Right.
And the bottom line, I'm seeing dollars being siphoned off. I'm seeing individuals like Fink and others that are using the state of Florida's money for a social agenda. And guys, do what you want to do with your own money. Run for office. But I just care about returns, and I'm not seeing that.
And you're pulling the money?
We pulled. So I run the treasury for the state. That's different from the retirement fund.
Yep.
I pulled $2 billion out,
right.
and look. At the end of the day, it wasn't a political move. It's become a political argument.
That's what I was going to ask you. How much of this you think is political? I mean, do you genuinely believe that those who are investing that are looking at ESG as a thing? And some people, by the way, there are some people who actually look at ESG and think that ESG is going to help their.
All right, main thing is this. I think I like that statement. Bottom line is most important. And of course, if I order fish, you do give me salad, that's something that I don't like. And of course, if you use the money for something else, definitely I'm not going to be happy with it. And I think this guy speak really outright, no nonsense guy. And I believe that that's one good reason. And of course, we've seen it before when the funds are being used in the wrong way. The investors who are smarter, they'll get up, and of course that was before things get very, very ugly. All right, so guys, to me this is going to come. This is just a matter of time. Let's hope that things can get better, but it's going to be tough. All right, we're going to look at the technical market right now on the 23rd of today, so come and join me in the next video. Okay, bye bye.